Taiwan dollar dips as China tensions persist. USD boosted by means of Hawkish Fed. The Taiwan dollar fell the most amongst Asian currencies on Wednesday as worries over a US-China standoff continued, whilst a pointy rise in the dollar pressured most different Asian gadgets. As of 0044 at 0445 GMT, the Taiwan dollar fell 0.2%, soaring near 12-year lows as traders continued to fret over U.S. House of Representatives Speaker Nancy Pelosi and RSQUO's trip to the United States of America, which has drawn ire from China. Pelosi landed in Taipei past due on Tuesday, and will meet with pinnacle Taiwanese officials later today. The speaker is the very best-ranking U.S. professional to go to the island in 25 years, and her presence in Taiwan threatens to in addition destabilize Sino-U.S. ties. China has reportedly mobilized its air pressure and army in response to the go-to. In addition to a war with China, Taiwan has to additionally deal with slow economic boom. Recent information confirmed Taiwan and RSQUO's manufacturing region shrank drastically in July. China and RSQUO's yuan was largely unchanged to the dollar at 6.7520. A private survey showed that service sector interest inside the mainland accelerated at a quicker pace in July than the earlier month, indicating that the economy was convalescing from the COVID-related lockdowns imposed in advance this 12 months. The Japanese yen endured to be an exception to its Asian peers, growing 0.5% as it prolonged its healing from record lows in opposition to the greenback. Broader Asian currencies moved in a flatlow range on Wednesday, forced by way of a big spike inside the greenback. Hawkish feedback from Federal Reserve officials Mary Daly and Charles Evans counseled that inflation changed into far from contained within the United States, and that greater steep interest fee hikes have been possibly so as the U.S. Greenback Index jumped 1% in overnight trade, even as Greenback Index futures added 0.9%. U.S. 10-year Treasury yields rose nearly 7%. Rising U.S. interest rates have a tendency to be bad for Asian markets, as they decrease the quantity of capital overseas buyers can invest within the area. A more potent dollar also tends to weigh on import-heavy economies within the location.